Hello there, everybody. I hope everybody is well. I'm going to get going in a moment. If my Excel spreadsheet isn't playing up, which is fun. Okay, that's not what I wanted to do. Don't know why all the price has gone into that. That's weird. Literally wanted it just to say hedge fund sentiment. Aussie US dollar. Did I like type something else in than that? There we go. Okay. Hi Ratish, how you doing? Hope you're doing well. I was just doing some work on a COT indicator at the moment, using all the COT data. Let me just save this. Okay, save, that's fine. And let's just pop this up here for now. Let's get rid of this, don't need this. Hi Bruce. I'm glad you're doing well, Ratish. Yeah, I've had some decent data coming out recently out of the US, so we're going to talk a little bit about what's going on in terms of US dollar. Actually seen a bit of downside in the US dollar rather than I guess the natural upside you would expect from fairly positive data. I'm going to talk a little bit about that, why I think that we could see maybe the dollar not performing too well. It's a interesting subject at the moment, the US dollar, because we've got lots of data that's come out and the dollar index is in a really interesting place in terms of just where it is in the market. But I've got some thoughts on what I feel could happen here for the US dollar. Mainly the fact that we have been bearish for a good period of time. So I don't necessarily think this bearishness is going away just yet. And that's mainly down to some commitment to trade report data, which I'll go over shortly. Obviously, you can see that just before there, I've been trying to build out my own sort of COT indicators, and that's not just because, you know, the ones that I use aren't good enough. They're very good. You know, I'm a big fan of using markets made clear, just that when you've got the data yourself, you're able to kind of play around with the data, see what comes up. At the moment, I'm just looking at hedge fund sentiment only right now. So you can see the red is the US dollar, CAD is the blue. We'll go here on Aussie here as well. I might change the color of Aussie actually, because let's change the color. Let's go for like an orange or something. We give them all different colors. But yeah, essentially just trying to build out different methods when using the commitment to trader report data at the moment. So this is the first one I'm going for, just looking at hedge fund sentiment. If we go over to all the COT data, this is what you download basically from the CFTC, and you can see you get all this data from the CFTC, which is a lot, right? It's a lot of data to go through. But essentially what you've got here, just to kind of bore you a little bit, obviously you've just got the market and name. So you can see here, this is the Canadian dollar futures from the CME. And then you've got different little things over here. So you've got sort of asset managers, okay? Over here, you've got leverage money, which is essentially your hedge funds and things like that. Your asset managers and dealers, they're like your commercials in the markets, which, you know, we can talk about this in more depth in another webinar or something, or another live stream. But yeah, I'm just working on that at the moment. Also working on a development of a sort of fundamental indicator as well. So just kind of building all these out at the minute. So yeah, just kind of looking at hedge fund sentiment at the moment, which was interesting because obviously we were looking at, and this is non-commercials, right? So this is the speculators, hedge funds and whatnot. So yeah. Ratish, I have a question regarding your currency strength meter. Is it best suited for swing trading rather than day trades? Yeah, better for swing trades. The way I like to use it is I will look at, let's say what it's looking at this week. So let's say Aussie US dollar bearish, for instance, or Aussie Swiss bearish, right? Aussie yen bearish as well. So let's just pick one of those. Let's just go pick an Aussie yen, because I know we did talk about Aussie yen this week. I think we talked about some downside on Aussie yen, and there was a nice little breakout lower. I think we actually talked about on Tuesday the breakout here for a move lower. So I think if you came and you shorted Aussie yen on Tuesday in the live stream, I think we were talking about this kind of break of trend there. That would have played out really nicely into that supporting level. Looks like we're actually getting a bit of like a head and shoulders pattern there now. So maybe that was the last sort of move before seeing a continuation higher. But yeah, essentially the way I like to use the currency strength meter. If I just bring it back up, oh, that's the Excel. I get getting confused because my other one's on Google Sheets. Here we go. So the way I like to use it, and you can see I've got this FX sort of heat map going here. I haven't filled in yesterday because I haven't really traded this week. What I like to do, so I come and look at the currency pairs. The currency strength meter tells me the sort of direction I should be looking to go in, right? Doesn't mean that you go and trade it in that direction in terms of you just blindly go and trade it. What I do then is I build this little heat map, right? And the heat map basically uses momentum indicators to tell me whether the trend is likely to continue or not. Okay, so the first one here is just the weekly close, right? So I like to see, has the weekly closed in line with anything, right? So let's say I want to be bearish Aussie US dollar. Did the weekly close as bearish? So that's a yes, right? Then the 50 daily moving average, I basically look to say, is it below or above the 50 daily moving average, right? And if it's below, that is bearish for price, okay? Momentum, is price moving away from the moving average, or is price moving towards the moving average, okay? So if it's moving away from the moving average, I'll give it a bearish score. And then the stochastic, what does the stochastic look like? So let me just side by side. Let me see if I can do that. Let me like side by side these a little bit. And I can kind of just show you what I'm looking at. Here. Right. So I'm on Aussie yen, so I might as well just stick to Aussie yen, right? So I'm just going to pop the 50 moving average on. There we go, 50 MA. Okay, so let's say this was Sunday. So I'm going to just hit replay mode. Where a replay mode would be, is that this one? So let's go to Friday's close, right? Okay, so I'll come to the charts on a Sunday. I do the currency strength meter, have a little look at what's strong, what's weak, right? And then I come to the heat map and I have a little look at what's kind of in line with stuff. So essentially I come and do some technical analysis on the charts. So the first thing I notice obviously is the fact that price is in a bearish sort of pattern here. We've made a new low recently, so I would call this phase here a P1 phase, right? So basically in that condition, which is this part here, right? Daily trend and daily phase. So what I'm looking for at this point is the daily trend bearish, and what phase am I in? Because if I'm in a phase one, I want to be looking to get short intraday. Okay, and that's what I mean by intraday. I mean on lower time frames, right? So Aussie yen I saw was bearish. It had a weekly bearish close. It was below the 50 daily moving average, and the momentum was it was moving away from the 50 moving average. I then have a little look at the stochastic. What is the stochastic doing? Stochastic is bearish. You can see that the momentum is to the downside here on the stochastic. So that's something I like to just add in. Now, basically, I want to see at least 4 of these. Okay. At least 4 of these kind of match up with price. Okay. The weekly doesn't necessarily matter too much. But I do like to follow the weekly chart quite often, so I like to see that it's in line with, but sometimes you can get like a bullish close, but it can be like a bullish pin candle, right, or something like that. So yeah, just have to take into consideration how the weekly has closed, and then you can determine yourself whether it's bullish or bearish or not. So essentially then what I do is I go to the daily chart, have a look at how that shaped up. So all I do then really is have a little look at technical analysis, and I say to myself, well, right, where is the kind of supply zone, right? So the higher time frame supply zone I can see on this daily chart, one is up here, one is here. Okay, I like the fact that we paused in at this point before price continued lower. Where would buyers be looking to essentially target price? Okay, so I look at this area down through here and say to myself, well, this looks like a good area for buyers to step in. Why? Because buyers were here before, right? We saw this nice wick to the downside and buying came into the market. So you can do this on a weekly chart as well. Nice bearish weekly close. Obviously I'm looking for areas for price to come in. We've closed in that sort of open and close area, so that's why I went to the daily chart to have a little look at any kind of demand zones for price. Obviously you can see this little pullback continuation. So really speaking, in and around this zone again would be an area I'd like to sort of target for price going forward. Now from here I like to kind of watch the 4-hour time frame. I like 4-hour support and resistance levels. So what I do is I'll kind of come up into areas and have a little look at where the 4-hour kind of turned around and things like that. So this zone here was a bit of a consolidation where price broke out, right? So that area there I know is going to hold some volume. So if I use a volume profile tool, let's say, and come down here, you can see that we've got this kind of zone in there. Now, if you remember on Tuesday when you were here, I actually had an alert set at 96.58 because it was the sort of high volume area. So I kind of basically narrowed my zone into this point and said, you know, if price can pull back into that zone there, I'll have a little look for some shorting ideas. But I don't think it did that in the end, if I remember rightly. I think basically what happened was price started to consolidate here. This was on Tuesday, and we were looking and seeing what's happening in price. Now, what I quite liked about this on Tuesday was the fact that the pullback was quite shallow at that point. So this would be something that I'd be looking to try and trade short on a breakout, I felt. Now, if I go down to an hourly chart, to kind of show you what was going on in an hourly chart, right? My 4-hour resistance zone is up here, but I'm pretty sure price failed to break this high. I'm not 100% sure, but let's have a little look. I think it pretty much failed to break the high there. Yeah, and then you had this close. So this to me could have been a short, right? Because we've got multiple sort of strategies now telling us to get short. You've got a break of trendline support, okay? We also have a close below the 50 moving average with an RSI crossover. You can also see we've actually had some divergence here as well, with price making a higher high and the stochastic making a lower high. So that's what I felt would have been a good short. So I'm pretty sure on Tuesday I talked about getting short Aussie yen, stop losses above the highs, target down in this zone in here. I didn't take this move because I was looking at potential reversal patterns on dollar Swiss at the time, but this was, I'm pretty sure, what I talked about on Tuesday. We'll have to go back and have a little look at it. But essentially then price did ultimately break down and go into this demand zone there. So would I necessarily now be looking to get short Aussie yen? Probably not. I'd probably say to myself, well, let's go back to the higher time frame. Where is the areas of resistance now? Well, we've got that area, which was an area where selling took place again. We've also got that kind of pause in the middle there as well. But ultimately, I'd be looking for something like this to happen, or like this to happen. That would have been sort of perfect, because that's where that point of control was, and that's what I was looking for at the start of the week. But you also have to take into consideration that we've hit this larger time frame demand zone now, which is the daily chart demand zone. So if you were, let's say you were looking at the daily chart to get short, right? Would you want to be short here? That's the question you have to ask yourselves. And look at how the daily closed, right? If I just kind of filter this on to the end of the day, that's how, I'm pretty sure that's how the daily closed, right? Yeah, that's how the daily closed, right? Up at that pin candle at support. So you have to ask yourself a question there. Do you want to start getting long from here? Probably not. I'd probably want to still try and get short up at the 96s. Like I said, you could possibly have got short at the 95s. If I just take this off here. Whoops, I didn't mean to take that one off. I don't know how to get that back, but it was just basically a support zone, resistance zone in there. And then, yeah, so the only other way you could think of doing it, if you wanted to try and maximize your risk reward ratio, is by going to lower time frames. This would have been a really nice setup in here. So you can see that price came back into the higher time frame level of resistance. So this would be the 4-hour level of resistance that we pointed out. And look what happens to price. So we rallied, came in, and then what did we do? We formed my favorite ever pattern, the double top pattern. The market then broke that to the downside, and we have been sort of declining ever since. Now, if you're looking for intraday trades in this, I would be going down further, right? I'd be looking at the structure in here, and I'd be saying to myself, well, okay, what if price fails to make new highs, right? So you could be looking at sort of your 5-minute time frames, maybe the break of the sort of neckline zone in here, and that could have been your short in the short term, or anywhere along this kind of level, and then you could have already been out of the move, right? So you can use it on a day trading perspective, but it's better if you use it from multiple time frame analysis, right? So we started on really currency strength meter pointed out Aussie yen shorts this week. Has the market moved short? Yes, right? But also, where was the demand, right? Demand was down here. If I was being really super picky, it'd be down towards these kind of wicks there, where you can see I've had alerts set and things like that. So that's how I trade it. Okay, so you have the currency strength meter points out what's bullish, what's bearish. I come over to my Forex heat map. I then fill out my Forex heat map and look for those that I feel is most probable to come through. So one of those was Aussie yen. Another one of those was Aussie Swiss. I don't really know how Aussie Swiss has performed this week, because I was looking at Swiss franc reversals this week. So when I was looking at Aussie Swiss, again, you've got to paint the picture of where do you want to be in, what do you want to do, right? So this is the weekly chart. Okay, you can see we had a very strong bearish close last week. Perfect. That's something you want to see. But where's the sort of support, right? Now, I think the support is around sort of 56s, just below, which is this open and close here back in August, right? I say back in August like it was ages ago, but last month. And then I go down to lower time frames, right? So daily chart. And this is where the daily chart's sitting at the time. So let's again just replay it. All right, we'll replay mode it and go back to Friday's close. So if you're looking at this chart here and you want to be short, where do you want to be short from? Now, you don't want to be short here, right? Because it just doesn't make sense to get short. And I always try and think in risk reward as well. So if you put like a little risk reward ratio tool on there, and then you say, okay, where's my safe stop? Well, my safe stop's up here. Where's my safe target? It's there. You know, you've got a ridiculous risk reward ratio, right? So the way I like to do it is say to myself, okay, well, where do I maximize this risk reward ratio, right? So if I just put that back in like this, and stop loss up there. Where do I maximize that with safe risk? So first area, you know, we've got back up here, right? The 57s, right? You can see that the market made some structure. Okay, let me just change the color of this so you can see it. Made some structure, okay, and we broke that structure. So that could be resistance going forward. Could be. Obviously, I don't know if it's going to be resistance, but it could be resistance, right? I like to refine it a little bit more because I like to maximize the risk reward a lot. So I'll go up to where we started to really kind of change direction in the market. So I'll be looking at this kind of supply zone in there. And that to me would be a better area to get short because I have a better risk reward ratio. Now, obviously, we can make risk reward ratios better by basically, you know, getting on lower time frames, right? Looking for lower time frame structure changes, and that gives us a better risk reward ratio. So essentially what I would do for the week is put a horizontal line there. I'll put an alert there, and I'll just wait for a price to come back into that alert, right? And see if price will come back and retest it. Now, obviously, if I go out of replay mode now, you'll see that we've not come up into that zone yet. So I've not done anything on Aussie Swiss. Market is pushing back. Also, I'm quite concerned that we've got dollar Swiss reversal potential as well. So that's something that was concerning to me. But ultimately, I'll just be looking at those higher time frame areas. Now, you can obviously refine that. You can go to a 4-hour time frame, refine that even more. And I'll say to myself, okay, where is all the support and resistance? Well, it's in this zone here. What's price doing from a structure basis? Well, you know, looking at this, we've broken into fresh highs. So if I was going to get short at 57s, where would I only get short to? Well, I'm only going to get short back to these highs because it would be silly to try and expect price to go to 55.80s, right? So, you know, I would be looking for price maybe to push up into the 57.50s before looking for that kind of turning point in price, okay? So that's another way you can do it. So I might as well just keep going through examples. Does this make sense so far? Hi, Vincent. Hi, CG as well. Hopefully, Ratish is making some sense. I've just realised I've talked straight for 22 minutes and my tea's going cold. So this is the way I like to do it, right? So obviously then it gives me kind of a focus of where to look for in the week. Obviously as well, you have other things that you can build into it. I talk a lot about commitment to trader reports. I talk a lot about retail sentiment within the market. This was something I was looking at on dollar Swiss, for instance, today. You know, I like the idea of being a reversal trader on dollar Swiss. Why? Well, if we look at what retail sentiment is doing at the moment, they are reducing their long positions from dollar Swiss, and they are starting to add into short positions because they think the trend is bearish, which it is, right? It is technically bearish, but retail traders are mostly wrong. So you want to be doing the opposite of them. And a clear kind of guide to show you there was the recent rally coincides with downside pressure on dollar Swiss, right? If you look at this recent downturn, what happened reflected on price? Price moved higher, right? So I'm looking for, can we buy dollar Swiss now in line with the fact that retail are getting rid of their long positions and starting to increase short positions, right? So I'm starting to become a little bit aware of the bigger picture of, okay, yeah, we could be looking at a bit of a dollar Swiss change there. So that's why I'm a little bit cautious on the Swiss pairs at the moment. But let's look at Euro-Oz. I don't know how Euro-Oz performed either because I haven't traded that one, but it was saying look for Euro-Oz longs this week. Now, we talked about a potential area of support, I believe, down here. Okay, so we're kind of in that support zone right now. So I'd be looking to see if there's any kind of development in and around here. But basically, if you go to the weekly chart, you know, why do I want to be long Euro-Oz? Well, I'll come over to the currency strength meter. Euro has gained strength. Aussie was one of the weakest currencies last week. So I want to be looking to potentially go long Euro-Oz this week. And the key word there is potential, right? It doesn't mean we go to Euro-Oz chart and we open it up and we buy it. That's just silly, right? What we have to do is create a plan, create a strategy around what's going on. So Euro-Oz, bullish. What did the weekly close as? bullish, right? Now, if I look at the structure of Eurusd, it's not clean, is it? You know, if we look at it really speaking, we've probably traded in this kind of range area here between sort of the 1.6s to the 1.7s, right? So it's not the cleanest of pieces of price action. You know, if we look left here, arguably, if we kind of just look at the insight, let me just kind of fill the chart here. If you look at the insight of this, you could argue and say, well, this was a significant high, price broke it, came back in, and now we've had a significant strong close. So is this a good idea to go long? Well, potentially. We did have ECB up today, and they did cut interest rates to 3.65%. So that's probably put a little bit of water on the fire of Eurusd potential, right? So if we look at just from a technical perspective, though, I'd be saying to myself, okay, well, if I want to be long, where do I want to be long to? Well, this is the opens and closes up at 167.50s. Could that be somewhere we look at? If I go to a daily chart, can that be refined in any way? Maybe I can look at it a bit higher, 168.60s. So I'd be looking at structure now and be saying to myself, okay, what else has happened? Well, we've broken trend line resistance there. Not the biggest fan of trend lines, but, you know, if we look at them and they're pretty clear as day like that, you can't really ignore them that much. Price has rallied. But again, if I go to Friday's close, and the reason why I'm doing this is because you can see kind of my thought process come Friday or Sunday when I'm doing my updates. Again, ask yourself the question, do I want to buy here if my overall target could be up there? Let's put a risk reward ratio tool on. There. Where's my safe stop? Safe stop is below those lows. Target is there. Again, negative risk reward ratio. So I don't want to be buying at the 66s because it just doesn't make sense to be buying at 66s. Where could I buy from? Well, if I go to the 165, okay, I've got a positive risk reward ratio. Even better, if somehow price comes all the way back down to this demand zone at 163.50s, then I've got a very positive risk reward ratio. So I'd basically be looking at that zone there as a potential bullish rejection. So I'd be looking at price to come down and like this, or I've got this little bit of a pause in the market, right? Similar to another chart that we were looking at earlier, Aussie yen. So can price come back into here? Can it rebound away? Can it go up to the 168.50s? That's what I'm looking at. So again, just go down, look at your 4-hour chart. Does it make sense to be looking to be buying around this area? Well, yeah, potentially. Let's have a little look at volume. What's volume doing at these points? Yeah, we can see high volume comes in at 164.88. So sometimes I'll just mark that up with a little line there, which is just the middle of that range, essentially, the middle of that box, which again makes a lot of sense. So if I go and just get rid of this now, all I'm doing is waiting for price to come back to that zone. Okay, we've come back to the zone now. What's the next step? Well, one or two things. You're going to look for your 4-hour chart, because if you're swing trading, you're probably not going much further than a 4-hour chart, and you're looking for something like that, okay, where we get a higher low, or you're looking for like a double bottom pattern where price fails to make new lows, because that tells me that sellers aren't really willing to push price below those points. Okay, if we go to a lower time frame, let's say a 30-minute time frame, do we have a break in trend? Yeah, you know, look, the market's come down, we consolidate, we push down again. Ideally, price breaking above these kind of highs here would be a potential confirmation that the market's going to start moving back to the upside. So then it's about strategy. You know, how can you get involved with this trade, right? Now I can see there's nice sort of rejections down in this zone as well. So maybe you could have looked at this bullish engulfing candle, for instance. Again, stop loss is up to you. You can be safe and put it there. You can be aggressive, depending on what time frame and what your goal for the trade is. If your goal for the trade is to be in and out with like a 1%, you know, I'd be looking at sort of my 15-minute, maybe even 5-minute to try and look for a little break in highs, and I'd be looking to try and trade the momentum higher. but I don't really do a lot of that trading anymore. So I'd be probably looking at sort of my hourly or my 30-minute time frame, and I'd be looking to see, does price kind of break any kind of structure? Does it reject it? Does it continue higher? So I think a good entry would have been probably off of that sort of high there, that engulfing candle. I think a good stop would be below the lows, and I'd be looking to try and target up at these sort of swing highs in here for like a 2-to-1. Okay, does that make sense? So that's how I like to use the currency strength meter combined with a Forex heat map combined with technicals. And this is why I always talk about, let me just get a little bit of space up here. Having your 3-step method, right? So this is my 3-step method, and obviously take what you want from it. If you think it's rubbish, fine. But this is my 3-step method. I've kind of coined it the WCS method, right? It's just an acronym basically for why. Why do you want to get into a market? Why is, some people just kind of go to a chart and go, I'm gonna buy it. No reason at all. They just think it's going to go up, so they buy it. Some people come to it and go, I want to sell it, so they just sell it. And some people, ironically, make money doing that, right? I know that there's moon phase strategies out there anyway, and stuff. But, this is something that's quite interesting. So I like to look at the why. Now, this can be sentiment, which is what currency strength meter is really. It's like a sentiment really reader. I like to use COT reports. I like to look at what the big banks are doing and whether basically what they're doing. I like to try and follow what they're doing. So you can see I've been building my own COT sort of thing. What else do I like to look at? I like to look at retail sentiment. I like to know what retail are doing. Are they with my trade? Are they against my trade? Does that influence anything that I'm doing? What else can we look at? Your why. This could just be a higher time frame bias. Maybe you looked at your monthly, your weekly. You can see that you've come into a significant demand zone. Okay, doesn't have to be too serious, but I feel like it's important to have it. This can obviously be as well fundamental bias. Do you have a fundamental bias? Do you know that the let's say Bank of Japan hiking interest rates at the moment, ECB are cutting interest rates? Can you go to euro yen, try and sell rallies? That makes sense to me. And then the C stands for conditions, and this is where my FX heat map comes in. Okay, because the heat map is basically narrowing down the conditions that I want to see when I want to go into a market. Okay, and you can see, like, for instance here, I've got dollar Swiss reversal, but I don't have enough conditions really to be aggressively trading that market. Now, ironically, I am in a position on dollar Swiss right now, which is in profit and is doing quite well. But that's because I was looking at commitment of trade report data and things like that. I had other things to back it up, not just the heat map. So I did get aggressively long into, well, not aggressively long, but I did take what I would say is an aggressive position because I don't have the heat map in line with what I was doing there. But you can see there's other charts as well, like Euro Kiwi, bullish. It was saying that I wanted to be bullish Euro Kiwi this week, but price was bearish, was below the 50 moving average. It may be a simple thing. Maybe you might think that's a bit silly, but I found that if price is above a 50 moving average, price tends to be more bullish than it is bearish. So because of that, and because the daily trend was bearish, I've stayed away from Euro Kiwi this trading week, right? So the heat map allows me to stay away from sort of, I'd say, silly trades basically, and it helps me focus in on markets that I should be trying to trade. Okay, then you've got strategy. Okay, now you can see there's a couple of different strategies I like to use. My main one is probably like a multi-time frame analysis sort of strategy, where I kind of look for changes of trend, or I look for trading patterns at higher time frame support and resistance levels. So that's, you know, super simple, right? It's not anything that's going to blow your mind. It's not like some super crazy algo, like, you know, with different kind of volumes and stuff. I used to use volumes a lot, but that's when I was day trading Euro futures. But yeah, multiple time frame analysis, and you know, sometimes I talk about the 50 MA 1 hour strategy, right? Which is like a trend following sort of strategy that you can use as well. So they're the kind of two main things that I use when I'm trying to then plan a strategy, right? So, you know, hopefully this all makes sense. So just to kind of recap, you know, I have a 3-step method when it comes to trading the market. It's called the WCS method. Why do you want to be? And this is the most important, right? I think this is one of the most important. Why do you want to be involved with the market? Okay. Now the strategy is sort of your timing, I guess, right? I could have typed that out, but that is your kind of timing into the market. Okay. Conditions. So this is my FX heat map. This is also, I should actually say, this is also kind of technical analysis, like I took you through as well. Just kind of looking at, do I have the conditions there to be able to kind of take a position within the market? And then the strategy, obviously. And the strategy is basically to have something to measure going forward, right? So when you review your trades at the end of the week, can I say, did I follow any kind of system that has a probability or an edge? And if I did, great. If I didn't, why didn't I? You know, what was the thing that was kind of keeping me away from doing that? Okay. So yeah, that's all I look for, really. Yeah, so that's how I would use. I know that's kind of a long-winded way to answer your question about, is it better suited for kind of swing trading or day trades? I think it can be timely for both. I think it depends as well, the momentum within a market. I think if you were looking at like the yen pairs recently, and you know, the yen pairs, obviously, you know, they were heavily bearish, and the heat map was telling us that there was a potential reversal coming. You know, I think in those kind of situations, I like the thought of, you know, yes, you could go to it day to day, because we were just getting constant bearish daily candlesticks, right? So you wouldn't have had the ability to swing trade them because price wouldn't have pulled back. So in those very rare conditions, I think, yes, you can use it for day trading, because you could probably look for like a low time frame trend following system that would work pretty well. You know, if I go to, let's have a little look at one. You know, if I look at the heat map, let's go to the strength meter. Let's have a little look at when yen was starting to strengthen. So really speaking, what's that, 8th of July, we should have been looking to buy yen. We should have been looking to buy it against the US dollar, right? Okay, so let's go take a look at the US dollar Japanese yen on the 8th of July. Let's go to a daily chart. So 8th of July is here, right? So basically what we saw on the currency strength meter was the fact that yen was getting stronger, the dollar was getting weaker. So it was telling us that we should have been looking to get short US dollar Japanese yen around the 8th of July, which you can see that's a pretty nice sort of move that's been had within the market. Now, again, how would you have traded that situation? Well, one thing I would have looked for is, at the time, do we have any kind of, you know, breaks in trend? Do we have any kind of supply areas to work with? Any kind of extremes? Now, one rule that I really do have is I do not sell lows and I do not buy highs. That is the opposite of what I do. I sell highs and I buy from lows, right? So you can see if we narrow it in, that would have been that would have been pinpoint accuracy. You know, obviously I didn't take that, but that would have been like awesome to be able to do that. I didn't do anything there because really the move came sort of in the morning as well. But when we broke through that sort of level there, you know, it's all about trying to find those resistance zones to work with on the way down. So I would have been looking at sort of those kind of turning points in the market, any kind of areas like this. Again, you can see if you were looking at it from a swing trading perspective, you know, maybe you could argue that's one there. It would have been very difficult to get in, right? Because you haven't really seen price pull back that aggressively. So in those type of conditions, I like to go and look at the trend following system. So I'll be looking at the 1 hour 50 moving average and the 200 moving average with a RSI, a stochastic sort of overbought condition. Again, super simple. You've probably heard of this strategy 100 times before. But the thing that makes a strategy good is knowing when to use it and when not to use it, right? So I think a lot of people get strategies and they just blindly follow them, which is good in one sense. But I think if you're going to do that, you might as well just algo it up as an EA and just let it go, let it walk away, and just walk away if you're going to do that. Because what's the point in wasting your time manually trading if you're just going to follow a system anyway, right? I think my system would be very hard to code because it's very discretionary in terms of, yes, I follow a process, but it's definitely down to my sort of thoughts about what's happening and what's, you know, where I think's best to get short. You know what I mean? So just in that case. But anyway, you can see here as well, we've got this sort of overbought condition here as well. You've got a couple of conditions here and here. And again, this is knowing when to use the strategy, when not to use the strategy. And obviously the market just, you know, kind of falls off there, and then we hit that demand zone. So when we hit the demand zone and change trend, I'm not really looking to get short there anymore. But I'd say that's a rare condition where you've got very aggressive price movement. The momentum is to the downside. So you're more likely to try and catch these type of situations, if that makes sense. Whereas a lot of the times we've got sort of choppier price action, and the trends aren't as clear as what's been happening on the yens, right? But you know, since we kind of changed back again, you know, so I think I took a short position here one of the days a couple of weeks ago, or even last month. Ended up taking profits down at this demand zone. Price then changed trend again, and then it kind of comes back, and you know, we're back in that demand zone now. So yeah, it's been interesting price action recently, but that's the way I would say I trade the markets, right? I have two methods. I try and identify what's going on, why I want to be in positions. You know, if I go back to, I can't remember what I did it on. Was it Euro Rs? There you go. If we go back to Euro Rs, you know, think about this. It's why do you want to be in it? The conditions are really important as well. You know, your technicals and stuff, because they help you to time things. They help you to know when to use your strategy, when to implement your strategy, right? I think a lot of traders just focus here. You know, I was very guilty of this in the beginning. I tested hundreds of strategies. You wouldn't believe how many Excel files I've got of strategies. Like I've got loads, right? I even had one once where I was just looking at daily engulfing candles and whether they were profitable or not. So I'd basically, if there was a daily bullish engulfing candle, I'd buy it. If there was a bearish engulfing candle, I'd sell it. And surprisingly, that was quite profitable. But it just, you know, in the long run, like over years and years and years, is that really going to be something that's sustainable? I don't know, because, you know, markets are conditioned. You know, the conditions change all the time. Also, as well, I always thought there was more to trading than just trading engulfing candles. So, you know, that's why, you know, I created this method eventually in the end. But, you know, why did I create this method? I think this is something important to talk about as well. I created this method because I was failing, right? And there's an interesting concept that I always think about. When do I tend to kind of want to say, I don't know how to word it, but I think a lot of ideas come from frustration, right? So you're trading for a while, it's not going your way, you get disheartened, and then you think about giving up, right? And then you say to yourself, no, I don't want to give up because I've dedicated so much time to it. I think that this is going to be something that I want to do for a long time. I love to do it, that's another thing. But I think a lot of your ideas come from frustration, right? So I was failing, right? I wasn't doing very well. I first decided to learn about fundamentals in the market because I thought, well, I'm just trading technicals at the moment. My fundamentals are very weak. I need to understand what's going on in the market. And then I met a trader. I was very fortunate to meet the CEO of Markets Made Clear. And he really looked at me and said, well, why did you take that trade? And why did you do this? And why did you do that? So I was just thinking like, well, yeah, what's the why? Why am I buying euro dollar and why am I buying it at that price? Simple question to ask yourself. And I couldn't give a good reason why, right? Now, and then again, I've been quite fortunate in my life so far, in my career so far, to meet some good traders. And they were like, another guy said to me, if you were working on a trading floor and you were managing millions, right, and your boss came up to you and said, why are you in that trade? And you can't answer why you're in that trade, you'll be fired. You'll be fired. You'll be gone from the trading floor. You won't have a job, right? So I thought it's important to have a why. Why do I want to be in that market in the first place? So that's why I created this method that you see here, because I was largely just frustrated. I was really frustrated with my own trading. I was really frustrated with my results. I thought they could be better, and I wasn't doing very well. So I just kept on sort of putting myself, I guess, in that situation of frustration. And once I was in that area of frustration, it made me think, well, okay, what do I need? Now, I might get to that point again in the future, right? I might get to a point, even with this method now, where it's not performing as what I think it is, and I can say to myself, okay, what is it, a personal thing? Am I doing something wrong? Or, is there something within the conditions of the market that's changed that I need to think about more? Is there things that I can add to it, right? So the first thing I ever started with was just currency strength and weakness. That's why I talk about it so often, because it's the first thing that really kind of changed my perspective of the markets. I never really thought of, and again, this may sound silly, when I first started trading, I never really looked at the likes of Euro Oz here, for instance, and made the connection that you trade in Euro US dollar versus Aussie US dollar. I thought it was a completely separate thing. Obviously now, I know that it's very much not. It's just a derivative of Euro US dollar versus Aussie US dollar, right? And then obviously you just keep learning, and you keep learning more. So then I learned, COT reports, retail sentiment, other fundamental biases, how to read when, what happens with the bond market, that's very important. What happens in equity markets is very important. So yeah, that's a long-winded rant into answering your question. So yeah, any questions about that, guys? I guess. I just feel like I've been ranting at you for ages. I can see we've actually got quite a few people in today. So welcome to the live stream. If you haven't seen the live stream before, we do this every Tuesday and Thursday. We talk about, opportunities within the markets. We talk about the currency strength meter, the method that I use here on a day-to-day basis. We look for, charts to trade and how you can trade them, methods and stuff. So yeah, if you enjoyed the content that you've seen today so far, please hit that like button. It lets me know that you've enjoyed watching it. And maybe you've learned something new. Maybe you've just took one thing that I've said and gone, you know what, maybe I can add that into my my trading? Because I think that's also a good thing to look into. You know, don't always just assume that, you know, you're going to take someone else's method and it's going to work for you. That's really not the case. It's how you understand the market. So this is how I understand the market. This might not be how you want to trade it or how you understand the market. You may think like, I don't know, you might think ICT methods are good, right? So you might use ICT trading strategies and stuff like that. Who knows? But yeah, any questions, guys? Let me know in the chat. You know, Ratish, hopefully that was all right. Vincent as well. Benedict, Bruce, CG, let me know what your thoughts on that. Any questions on what you want to see today? Because I've just done 50 minutes of talking about the currency strength meter. So, you know, this is something we spoke about. Let's talk a little bit about dollar Swiss. So, you know, why do I think we're going to see some kind of reversal on dollar Swiss? Well, there's a couple of different reasons why. I think we could be seeing some reversal patterns, largely due to currency strength from weakness, a little bit of currency strength from weakness, but also the commitment of trader reports, right? So let's have a little look at some commitment of trader reports first, and then we'll have a little look at what's going on. Like I said, I've kind of already pointed out the retail sentiment on what's going on. But if we just have a little look at major currencies, Swiss franc here, we can have a little look at what's going on. So seasonally, the Swiss franc actually is performing quite close to its seasonal pattern. And we do typically see a little bit of a bullish period now, but you can see how price is kind of performing versus how it should be performing. So it's not really performing as you would expect right now. If I just calculate true path here and have a little look at some of the other years, again, it kind of suggesting that we do see a little bit more strength in the Swiss franc. But I'm not necessarily, I don't think that is not going to happen, but also you can see that we usually around the start of October, end of September, we can see a little bit of a top in formation and the market move lower. But if I go to the COT reports, let me go back here, COT reports, and we open these up. So let's have a little look at the Swiss franc number one. Okay, so this is the Swiss franc futures chart. Okay, so if you want to trade dollar Swiss, you just inverse the chart, so you can see that we're coming up into some highs on the Swiss franc futures chart. Now, what's interesting about this, if you look at the signal here, there is a 6-month short signal from the commercials, and that's basically means that on a sorry, let me add that back in, take the longs off there. It means that basically over a sort of 6-month period, the short contracts are at extreme levels. Now, if you actually look at the data, shorts aren't really that aggressive. Sorry, I'm meant to be looking at the comms here. Shorts aren't really that aggressive there, right? So it's not as aggressive as I'd like it to be. You know, if we look at where short contracts have been in the past, like up towards 28k, which is reflected on the chart like here where we saw that drop. So they could be higher, right? COT reports could show a little bit more sort of upside there on the short side. But if we look at the longs, what's interesting about the long position in here is they've really reduced their longs, right? Which tells you one thing. It means that they are, you know, aggressively getting short, really. It's just they do it in two different ways. So you can just look at the sort of net positioning, because the net is just basically the longs minus the shorts to kind of see what happens with price. Now, commercials are going to do the opposite of what price is doing because they're hedgers, right? But what I typically look for in that case is, do they get to sort of extreme levels? So you can see here, for instance, you know, if I just kind of open this up a little bit, they were getting long at extreme levels, right? And you can see that reflected in the price here. Okay, so they were getting long extreme levels. This was something we actually spoke about a while ago. If you can go actually check out a COT report video I did on the channel, and it was a pound Swiss short, which played out really nicely. And it was because this Swiss franc futures chart was showing some substantial buy-in from the commercials. It was like they were buying it very aggressively, and we were at this 1.1 level, and the market has moved higher, right? So that's one way you can use it. Obviously, you can look at your non-commercials as well, because they are they're managed money. So that's your hedge funds and your large speculators within the market. Now you can see they do what price is doing essentially. Let me actually change this around a little bit. Let me go chart 2 as the non-com position, so I can fit it all on the chart. Let's take away the long and shorts. Now you can see that they are getting long, right? They're getting long because they're trend followers, okay? And you can see they were aggressively short down here, right? Which was the opposite of what the commercials were doing, because they do what the opposite. So when commercials get non-commercials, which are your hedge funds and things like that, when they get aggressively short, that's your time to get out, right? You may think that would work the opposite direction, but it doesn't, because what tends to happen is they take profits, right? And you can see now they've started to flip to being buyers of the Swiss franc futures at the moment. But what's really intriguing to me at the moment is that we're up towards this 1.2 handle, and this is where I think we could probably see a little bit more off the table in terms of what's happening from a commercial side. And you can see, you know, contracts are the highest they've been for 6 months or so. Bruce got a question. John, have you seen the trading tool called Forecaster? If you have, what do you think of it? I've not seen that. Let's have a little look. Is it free? If it's free, it's for me. That's the saying. Forecaster, best stock market and analysis and decision for traders and investors. Forecast on financial instrument, commodities, ETF stocks. What is Forecaster? So there's looks like they do a seasonal fundamental COT report thing as well. Let's have a little look at this then. Let's see if we can see any of their COT reports. Let's see how it compares. So we're looking at Swiss franc, right? Let's see if they've got the Swiss franc COT reports there. Okay, you have to buy it. It's kind of looking very similar to my one that I'm building here, right? So you got the price overlaid. I'm just struggling to get the price to actually look okay. You know, it doesn't look too bad on Aussie US dollar, but it just looks. I think I've got to do something with this axis here, or change the axis in some way, because basically what I'm trying to do here, and obviously you can create this for free, is I'm looking at sort of the hedge funds open interest, so the sentiment from the hedge funds, and then overlaying price on the top. So here you can see we've got Oz sentiment and dollar sentiment. So let's say if you're looking at sort of the Oz futures, you know, the sentiment from the hedge funds is that they're selling and dollar is buying. So really from this point you'd see a downward trend, which you can see happened. It's just I'm finding it hard to make this look good. You know, I don't know why it's not showing the price as I want it to show the price. So I'm gonna have to look into that a little bit more. But yeah, just because I could see this in the background, right? It says buy a plan to unlock. Looks kind of similar to what I'm looking at on my own screen, but I don't know what that is. Maybe they do like a. Can I look at seasonality at least? I mean, they've got a D trender, which is handy. So basically a D trender will take out the big moves in the market and it will just show you what on average has happened. But like when I compare that to markets made clear here, you know, and if I go up to like, I don't know what the prices are of this is. You can have a 3-day trial. I'm just gonna have a little look at how much it costs. So a monthly plan is £28. Blah blah blah. Stock screener. You do get seasonality and COT reports for that, so it can be a bit of a cheaper option there. I just don't know what kind of analysis you're going to be getting from that. You know, if I compare this to like, and then I go and look at the seasonality here. The thing that I like about this is you get cross pairs as well for one, but just the tech that comes with it. So like, I love this what if tool. So, you know, what if July was really bearish, bullish, sorry, I can go July is positive, and then it gives me a correlation that goes with that, you know, and it will show me all the years that correlated with those years. 2007 was one of those years. So I just love that stuff. I love true path. I can click calculate, and at a click of a button it will show me the best performing years compared to this year as well. So basically, is it following that path, which you can see it's very closely following that path. So yeah, I know I'm a bit of a sucker for markets made clear, to be honest. But yeah, good potential alternative there. If you do want to obviously have a look at alternatives, it looks like a good. Well, I can't give an opinion on it because I haven't used it. So maybe I'll do a 7-day free trial and see what it's like. Go from there. Mads, hi, have you already looked at dollar yen and gold? No, I don't think so. Anyway, we talked about dollar yen a little bit because of the currency strength meter was basically saying that we should have been short from the 8th of July, and we've had that move down now. But looking at dollar yen now, again, you have to ask yourself the question, right? Do you want to buy it? Right now, I don't necessarily want to buy it, but like, I want to sell it because of the currency strength meter. But where do I want to sell from? Is this a good place to sell from? Probably not, right? You know, if we get rid of some of this technical analysis now, I probably want to sell from areas like this, right? 145s, maybe even, you know, aggressively higher, up at 147s, you know, maybe 149 if we get the luxury of the 149. Don't really want to be selling here because we are at a strong level of demand. You know, I do think that maybe price could come a little bit lower, perhaps down towards 136s. You know, I do quite like the 137.50s as well, which seems to be a decent zone where price has reacted in the past. So I do quite like the idea of price coming into there. It's hard to make me want to put a risk on there right now. You know, I just don't feel like that's a good idea. If anything, I think if we started to see that play out, maybe a break of that, head and shoulders, maybe we could see a move up to the 146 before seeing a condition where price comes down. But I don't think I want to be selling this market right now. I want to wait for price to come back a little bit in line with what I think could happen. Gold, let's have a little look at gold. I haven't actually looked at gold today. Looks like we've broken into new highs as well. So I was actually thinking of doing a short video today, and I was thinking what to do it on, and I was going to do it on gold, but I was waiting for the data to come out because I thought, well, what if price makes new highs again? So it looks like we've got new highs. Now, this is quite interesting. So we had a sort of sentiment on the commitment of traders, which was saying that we shouldn't be looking to get long beyond this point in the short term anyway, because non-commercials were aggressively long here. Now, as price fell away, those were reduced, and then obviously prices started to break back to the upside now. So yeah, I don't think the market top for gold is quite here yet. If we just actually have a little look at the COT reports again. And the commitment of traders report's a really good tool to use when you're looking at sort of gold, right? Because it's a commodity, right? So if you look at gold, you can see that we're just, you know, we did have a sell signal, right, on gold, but it was a couple of weeks ago, and it was a very short-lived one. What I'm waiting for is for something big, right? Now, if I look at the short contracts on the commercial side of things, now you got to think, right? What are the commercials? They're in it for business purposes, right? So surely, if they felt that gold was too high, they would be selling aggressively because they would be making more profit from what they produce, right? Now, if you look at what's going on, the contracts are only at 400k. Now, where have the big turning points come from in the past? Well, one was here, and if we have a little look at where that was with price, that's there. Where were contracts in sort of similar levels to that? We had this whole period here, which is like this period here, right? We had aggressive short contracts here, which was around this zone there, right? We had a little bit. Now, these are weekly charts, remember, so you know, take that as you will, but like as soon as we started to see that move down there, this was the most important one. I feel this was the most recent, so I'm still waiting for kind of short contracts to breach 400k, and I want them to be at an extreme that we haven't seen before. That being said, I also want non-coms to be shorting, to be buying at aggressive rates. So I'm kind of waiting for them to be up at similar levels as well. Now we are nearing the sort of 364k mark there. But basically I want two extremes. I want commercials to be shorting more than they did back in 2022, which caused this move downward here. And I want non-coms to be buying aggressively at highs, and they're not doing that at the moment. You know, we're not really there just yet. So that's what I'm waiting for. I'm waiting for price to basically, well, we'll see what happens in the next report, I guess. But I want to see more aggressiveness from the commercials, and we're not getting that at the moment. So I don't think gold's going to top out anytime soon. I've talked about this for a long time now, ever since kind of these areas here. You know, gold wasn't at areas where I would want to be shorting. You know, I did think at one point it looked exhausted, and we could probably, you know, I'd want a deeper retracement, but we just haven't had that. Price has just continued higher. So looking at gold now, you know, do I want to buy here though? That's the other question, right? Who's buying here? Because I'm not. You know, if I was going to buy anywhere, it would be down at those lows there. You know, that would be a sensible area to buy because you've got a good area to put your stop loss. Am I buying the breakout of that? No. You know, if we get similar structure again, maybe we get, you know, a breakout here, a couple of days, market consolidates. Maybe I start to get in around 25, 31s and then look for highs again. But it's hard. It's hard to try and trade a market like this now. You know, you can try and look for value elsewhere. You know, maybe look at silver. You know, again, I think still feel like this is probably my trade of the year, getting long at $22. You know, that was a really good run. But you can see, if I go to a monthly, I really like the monthly chart here. You know, look at those wicks to the downside. Just from a technical point of view, nice wicks to the downside. I'm just waiting for, you know, a good setup here, right? We started to break higher again, which I thought, yes, we're starting to see bullishness, and then we fall back down. We came back into the demand zone here, and the market found support. We double bottomed, you know, look at the 4-hour time frame, double bottomed, and now we're starting to break higher again. So if I think I'm looking for sort of value elsewhere, you know, I'll happily go and try and buy some silver again. I think I'm just going to see how this week plays out. You know, I quite like the monthly setup here, so I think we could easily get back into the 32s. Arguably, my overall target for the sort of year, when we were looking back at the sort of start of the year when price was down at the 22s, you know, I was looking to say, you know, I like the idea of price hitting the 35s. So I'd like that to come to fruition, just for my ego, more than anything. So I'd like to see a move up into the 35s there. So yeah, hopefully that makes sense, guys. Any other questions? Any other questions? If not, I'll probably leave it there because we've been going for an hour and 10 minutes. I didn't realize. I've got some more content to go make for you guys in the future, so I will leave it there. But yeah, I can see that we've got 83 people watching at the moment, which is probably the highest we've been. So thank you to everybody that is watching. Really appreciate all of you watching, and if you have learned something new, please hit the thumbs up or wherever you're watching from. I don't know where you're watching from. It could be Twitter, Facebook, or YouTube. But if you're on YouTube, hit that like button. Also, if you're on YouTube as well and you're watching this for the first time and you've come to the channel for the first time, hit subscribe. Lets me know that these are worth doing in the future as well. But yeah, thank you very much. If you want to learn more, come to the next stream. The next stream is going to be on Tuesday, the same time. And I look forward to catching up with you then. Again, just a big thank you, guys. Thanks for the regulars as well that have come in and asked questions. Really appreciate it, guys. Thanks to new people. Hans, thank you. Mads, thank you. So yeah, have a great weekend all. Thanks, Bruce. Have a great weekend as well. And I will speak to you next week. Cheers, guys.